How's it going, everyone? This video is going to be about how I use equilibrium in continuations. So you have seen my discount and premium video. You know that is how ICT uses discount and premium. However, I use it the opposite. So let's get into the video. The first thing you have to understand are the Fibonacci settings. So I'm going to use a simple Fibonacci with a 0, 0.5, and a 1 marked out. And generally, I remove the 0 and 1 and just have the 0.5. But how am I going to measure the candles? I'm always going to measure the candles from wick high to wick low and then mark out the equilibrium that way. I'm not going to use the bodies like I do for the change in the state of delivery or order blocks. Now, something you have to understand is the phases of price, and this is the main reason why I use it opposite of how most people use discount and premium. If price is in an expansion phase, which is the phase that I trade, price rarely goes and retraces to a discount or to a premium. You can see here we have an expansion leg up, a retracement, and you can see it expands higher before reaching down into a discount. And once again, the same thing. So understanding this with expansions, what can you anticipate? The way I use equilibrium is in expansions, I'm looking for the upper half to respect for price to trade higher and the lower half to respect for price to trade lower. Now, if these do not respect, I then can flip my bias and anticipate the low of the range being taken. So here is a quick example. I have the previous day marked out. We have an expansion. I'm looking for 0.5 of this range to support price higher. So what I'm going to do is match PD arrays in that range. So you can see we have a protected low right here, as a low has formed out of this fair value gap, closed over. So if I'm not expecting this low to be hit, where is a PD array that I can anticipate to be touched? Right here, I have a fair value gap in the upper half of this range above the protected low. So as we trade into the next day, you can see that is where we get a reaction, a change in the state of delivery, and then we continue to expand or trade higher. So looking at that on the higher time frames, you can see this higher time frame candle just respected the upper half of the previous candle's range to trade higher. Let's hop into TradingView and go over a few examples of this. So here we are with our first example, and just to give it a little bit of context, we have these equal lows that were ran out to our left, and we have this high above us. So we are in a range, we have just purged the low of the range, so we have an accumulation, this could be a manipulation, and then we could see a distribution or a move back higher. So one thing we know about this is we do have that closure where we sweep out and close back inside the range. So I could view this to trade higher. Another thing we can note is we are closing over the previous day's EQ. So if we're not respecting this side of the range, we are going to look to trade to the other side. And we have these failure swings also resting here. So going to take a look down here on the hourly. If we are going to look for the next day to respect the upper half of this day's range, what PD arrays can we mark out? I'm going to look in the upper half of this range, taking a look there, drag it over. What PD arrays do we have? So we have a tiny little fair value gap right here. And we also have our protected low right here, as this has retched into a fair value gap, closed through the down close candles. So I can expect this low to hold if this day is going to trade higher. So let's go move forward towards the New York session where I generally anticipate expansion for the indices. You can see we are consolidating, and there we get a move into that fair value gap. And I ask myself, is this fair value gap respected? No, it is not. So I could pretty much ignore it. And now we are down near these opposing candles. So if I'm looking for price to trade higher, I'd want to see it do that there. And now we have closed through the down close candles, sweeping out all these lows. So if you've seen my change in the state of delivery video, that is a change in the state of delivery. I'd want to see the upper half of this respect or this to trade higher from this fair value gap. And you see, we respect that area, we get a new continuation candle. And now let's go into the next day. Now we have traded and we have closed over the previous day's high, and we have left these highs to our left as well as the other side of the range. So if I'm expecting this to continue to trade higher, here is my EQ. And if I have a PD array in this area, well, I'm taking a look, I have a small fair value gap and this opposing candle here, and I have a protected low right here. So really, I'm expecting price to trade higher, leaving this low, trading to the highs. So as I let this continue, we reach down into those opposing candles. We close over the opposing candles, which forms the wick of the higher time frame candle. So just to review, each day we respected the previous day's EQ to trade higher. So you can see each time respecting the EQ to trade higher, forming that higher time frame wick. And going into each day, I am mainly focused on finding an invalidation for that day and the PD arrays that I anticipate to support in the upper half, since this is a bullish scenario. And there you can see we go take out these failure swings here and are trading to the other side of the range. Let's get into another example. In this next example, we are going to go ahead and stay on YM. And here we are on the hourly chart, but let's hop out to the daily, as this is where I like to use the equilibrium. You can see here on the daily chart, we have taken out this low and we have closed back inside the range, but we have a nice bearish expansion candle. So this is where I give myself an if-then scenario. If the EQ is respected, then we can trade lower through previous day low and possibly to the low to the left here. If it is not respected, then I anticipate it to trade higher to these failure swings on the high. So once I have determined that, then I go down to the hourly chart and I take a look at the intraday price action. You can see we get a consolidation. As we reach early New York, we sweep out this side of the range and then we trade back through. So I will drop down to a 15-minute chart just to give you a better picture. And you can see we do have a very aggressive sell-off here. But since we are respecting the equilibrium of this daily candle, I can then expect these lows to get taken instead of, if we go and close through over this equilibrium, looking for the failure swings on the high. So let's hop into another example. So in this next example, we're just going to do a walkthrough of a few days of price action while watching the daily closures paired with the equilibrium and then the lower time frame chart. You can see here, if we get into the closure of the day, did we respect the EQ of the previous day? So marking that out right here, we do respect it, but we have a nice bearish closure with the sweep of the previous day high. So if we can respect the equilibrium of this previous day, then we can trade lower to these lows down here. Now looking for a PD array in this area, this is where it's not always perfect, right? We don't really have a PD array in the lower half of this range. We really just have all these failure swings lined up and then reaching up into this fair value gap here. This is where I will allow it to trade a little bit higher than I normally would because of the structure on the hourly time frame. So as I let this play forward, you can see we do get a little bit of consolidation. We then sweep that high into the fair value gap and then trade lower. So as we get into the next day, we have now closed nice and bearish. So if I'm expecting this to trade lower, I would want to see it respect the lower half. But what do we notice? We notice that price already gapped down and then traded back into the range. So now my whole thought process is wait for the next daily closure as this range has already expanded. You can see that EQ does still give a reaction at the New York Open to sweep out these intraday lows minus the gap down. But let's get into the next day. So the way I view this is we have taken out the previous low. We have closed back inside the range here with a nice bullish candle. Now we have respected the EQ of this, but I am more focused on the swing formations. So if we're going to respect the EQ of this candle, what do I have? Well, in this case, there's two things that can happen. We can either sweep out this low or we respect it. I don't really know what's going to happen, so that's when I just let the daily profile confirm or invalidate my thought process. So as we trade lower here, we get awful close to this low. I'd want to see this low swept out. This low gets swept out. We're respecting the EQ. If we are going to trade higher, this is where I would want to see it. And I would look for the change in the state of delivery or an order block formation here. We get that order block formation and we get this continuation higher, right? So I have a series of if-then statements and then I search for the PD array. So we let this continue. We take out this previous day high. We close back in, but it is a nice bullish range. Once again, if I'm zooming in here, I want to see the upper half of this respect, and I have an opposing candle here, and I would not want to see this low taken out. Now, the only concerning thing is we have already taken out this previous high here, which can set up a deeper retracement. Let's see what happens intraday. Here we are currently respecting this opposing candle. Do we get the confirmation of the close through the series of down close candles that made this low? Let's see. We do not. So without that confirmation, there is no bullish setup there, and you can see it fails pretty good. Now, as we let this go into the next day and carry on our bias, what do we notice? In this candle, we have a very large wick, so it doesn't really make sense to use the EQ of the whole candle. If you go back to my wick video, it'll make a lot more sense to use 0.5 of this wick here. If 0.5 of this wick gets respected here, I can see if this low gets swept out. Let's see. We sweep out this low. We have a nice closure. So if we're going to trade this higher, I'd want to see us close through this series of down close candles that made this low. We do get the closure through it with this new order block formation. Now I'd want to see a closure through this level to trade higher. It took a minute to close through that down close candle, but once it does, we do get that expansion to the failure swings on these highs over here. But hopefully that makes sense how I paired daily closures with the daily equilibrium to search for expansions. I'm going to use it just as I showed in the PDF with PD array matching, and then just pairing it with a change in the state of delivery and basic market structure. Now let's go through a few more examples so you really get this locked into your brain. You can see here we have had a consolidation, and how does that blend with the phases of price? We have expansion into a consolidation. We have taken the high in the consolidation. So if we are going to trade lower, this is where I'd want to see it. Now paired with the equilibrium and the closure, we've swept out the high, had a nice closure lower. We have swept out the low, right? So this is less ideal as it has taken both sides of the range. But if I want to see this trade lower, where would I want to see that from? The 0.5 of the range. So once again, dropping down to the hourly chart, we'll let my indicator plot the EQ and the higher time frame candles, and let's see how this works out. So you can see going into this day, if I'm looking for the previous EQ, which is right here, do I have a PD array in that area? I do, as I have an opposing candle or an order block. And that also gives me that protected high going into the day. So if I was wanting to take a positional entry, that is where I could take a short with my stop over this high, and then looking for the other side of the range or 2R. But let's see how this plays out. We reach up into that opposing candle. Once again, if you have seen my video, we want to see 0.5 of that be respected. It is being respected. And then we trade lower off of that. We get expansion into retracement. Now we're getting a new expansion in which I could use that whole series of up close candles. And we continue through the low. Now continuing this bias into the next day, what do we get? We have a nice bearish closure, right? So if price is going to respect the lower half of this, I'd want to see it go lower. So as we let this go, what PD arrays do we have in this area, right? And to just highlight it, this whole area here, I look left. I don't trust this as an order block because it is just in a consolidation. So I will use the high of the range as a point of interest and either look for a sweep or an SMT on that high. And there we go, we get a sweep. And what do we get at the sweep? A change in the state of delivery, and we continue lower. So you can see in that example how during expansion, up close candles are going to be respected and the EQ is also going to be respected. We're not going to get those deep retracements into premium to look to sell. So here we are in our next example, and you can see we have had expansion. Do we get this met with expansion, consolidation, or retracement? Well, price isn't consolidating, price isn't expanding back into this range, so this is a retracement in which I can anticipate another expansion lower. With this daily closure, this is where I could use 0.5 of that wick, as we have a large wick, to see that be respected to trade lower. Now on the next candle, you can see we respect 0.5 that wick, and then we'll drop down to the hourly chart here for the structure. So you can see here on that new day, we open, we make a high that is paired with the change in the state of delivery while respecting exactly that 0.5, but I would also allow it to trade slightly a bit higher using this wick. And then we get this continuation lower from these PD arrays. Now with this closure, once again, I ask myself, do I have an invalidation? Well, if this is where I want to see price hold below, here is an invalidation for me. And here is a point of interest but I can use this fair value gap here. So letting this trade through, let's see what happens. We trade lower first, which usually means we're going to return to the opening price at least. And there we go. So in this case, you can see we do just leave shy of this fair value gap. So maybe I miss it. Or if I'm watching that higher time frame candle, so if we replay it, you can see it printed without a wick. Price comes, returns, just to put in a wick on that higher time frame. Right? And then we have an aggressive closure and then trades lower. So maybe I miss it, maybe I catch it. It really depends on what I would be thinking that day. And we continue lower. So you can see how each day we first respect the lower half of the wick, then we respect the lower half of this daily candle. And then if we're going to respect the lower half of this candle, we would also continue lower. But at this point, we have 3 days of expansion into lows. This is where I'm going to avoid price, as there can be a new phase of price delivery, either consolidation, retracement, or we get that reversal. So I just wait for new daily closures to tell me what is up. So the next thing I want to talk about is this is a fractal concept. You can see I was using it on the daily and hourly, and that is mainly what I use for my bias in lower time frame structure, but it is also fractal, right? Just like my fractal model used on any time frame, it's the same with this concept. So let's take a look at the 4-hour chart. You can see I've adjusted my indicator to use the 4-hour chart as the higher time frame for this equilibrium. And if we go ahead and replay this price action here, what do we notice? We have this expansion lower. We hit this low here. So if this is going to respect and trade lower, I'd want to see 0.5 of this be respected, right? Which is right where price is opening up. And you can see on the next candle, not only do we not respect that, but we also close through the down close candles into this low. So now I can view this as if we are going to trade this higher, I'd want to see 0.5 of this candle be respected. So as we let this print, 0.5 is respected. I'm now looking at this order block, and then we go and take out this high right here. We have now had a few expansion candles, 1, 2, 3. So if we are going to get a new phase of price delivery, this is where I would expect it, as it has taken out liquidity. Reversals occur at highs and lows. So as we let this print here, we sweep out this high. We have a nice closure. This is where we could then see if we respect this wick to trade it back into the range as a retracement. But I prefer to just align that with the higher time frame direction and trade the longs. Here you can see we get that expansion, reach into this opposing candle or the change in the state of delivery. Now I want to see is 0.5 of this respected. And here is a good thing to notice. We're closing above 0.5 of this candle's range, which is generally when I view it as a reversal, and I can use 0.5 of that wick. Let's see what happens. We respect 0.5 of that wick. We now close through the down close candle into this point of interest, the fair value gap, and this order block. So this is now a propulsion block. And if we are going to respect that and trade it higher, 0.5 of this candle right here. So now we have this little range that we're looking for price to trade higher off of. You can see we tap right into that range. That would be the T-spot. And then we expand higher. And if we continue to respect 0.5, there we go, expansion. So now with 3 expansion candles, I could get a new phase of price delivery. But the main thing I wanted to show is how this is a fractal concept. You can use it on any time frame. I prefer the daily 4-hour, hourly candles because that just gives me enough time to analyze it. If I'm doing this on a 5-minute chart, it just becomes a lot to look at. So I hope you enjoyed the video. If you did, please consider liking and subscribing, and I'll see you guys in the next one. Have a good one.